Hey there, my name is Steven. Welcome to WTX and we're bird watching. And I would bring it up again because it's going to be, whether it's a weekly thing or a monthly thing, but either way, two things happened over the week, Credit Suisse and First Republic. First Republic, their stock was dropping significantly, almost, I think, down 75%. And I couldn't help but think from what everyone has been saying, is that these banks from SVB to First Republic, they're all small. To me, they're big because they house millions and millions and millions of dollars. But to start with First Republic happened to get help from community banks. And they're big banks. Bank of America, Wells Fargo, Citigroup, JP Morgan Chase, Goldman Sachs, Morgan Stanley, Truist, PNC, there was a handout of $30 billion to First Republic to get them on their feet to help stabilize what it is that they were going through. Well, it sounds like First Republic, same thing with SVB, took a risk and they're taking a huge loss now. And they're paying for it. Unfortunately, those who invested in the bank or invested their money or invested in them, they're taking a loss as well. And I cannot help but think that even though these other investment banking companies pumped $30 billion into First Republic, that this is still just the start. Like, the momentum is picking up little by little, and it's going to affect more and more. There's one individual who has continuously put out information that has been wrong. And he's been consecutive. He's been consecutively doing this for what I know of as a couple years. And I'm talking about Jim Cramer. Jim Cramer, one sec, I guess I didn't have it up. He released a statement and he said, JP Morgan is a fortress. He's been wrong before, and he actually said that you should sell your Bitcoin. Only reason why I bring these two up is just because he's said in the past, like, he's made statements about SVB that it's a strong buy. It's not a strong buy. Like, from what we're seeing now, it's not a strong buy. JP Morgan is a fortress. You could read between the lines, or you can just kind of go from there and make your own assumption. But when he said that to sell your Bitcoin, we're seeing an increase in demand on these assets. And I cannot help but think that if these prices are going up, that any type of investment banks that have cryptocurrencies are going to have to sell those out as assets. Coincidence? Maybe. All I know is this is a theory that the more and more Jim Cramer talks, especially about specific things, on things that he likes and things that he doesn't like, it's like if you do the opposite of what he's saying, you could see large amounts of money coming your way. But then again, maybe, who knows? I don't know. All I know is that I'm making that assumption right there. But I just think it's odd that Jim Cramer would say such a thing, and then potentially we could see JP Morgan go under, whether it's in a month or two, whether it's in next week, I don't know. But we can also see some of these banks, Bank of America, Wells Fargo. Wells Fargo has been very choppy for the last couple decades. I'm not a big fan of them, and I don't think anybody should be a fan of them, especially with the shady stuff that they do. Haven't heard anything bad from about Bank of America, but I mean, there's probably something. I mean, I'm assuming that all these companies have done uninsured investments. They have taken in bonds that they're taking losses on, especially with the Fed rate hike that's been going on for the last year, and the Fed rate hike that's coming up. I mean, just because SVB went under and First Republic is facing the same situation doesn't mean that the Fed is going to take away the rate hike. I know there's been sources stating that the Fed might pull back on the rate hikes, but if they pull back on the rate hikes, like I said in my other videos, that we're going to see inflation continue to rise. And the same problem become more and more, it's going to become a mountain of a problem that's only going to end in disaster. So the Fed's got to make a decision. Are they going to raise the rates by a quarter or half of a dollar, or half of a dollar, half a percent? Either way, whatever route they choose, they're putting Americans at risk for a not only a recession but a banking crisis. It's going to be big. Onto the number two issue, Credit Suisse, which I thought was very interesting. Um, and they were being bought out by a Switzerland investment company, UBS, for what would be $2 billion. Credit Suisse was a $7 billion company, so it's almost as if they're buying them for, was it 50 cents a share? I think it was something like that. But when other investment banks purchase other banks, they're taking on their losses, right? So they'd have to accrue some form of profitability in order to um, make up for those losses. And I read a report earlier that Switzerland is holding a conference and unloading emergency funds up to $100 billion. I would assume it'd be half the amount of money that needs to help this situation with Credit Suisse, but that's a lot of money right there. And it's like the same thing with SVB. If the government steps in and starts handing out money, then they're handing out taxpayer dollars, right? Because even though the U.S. Treasury sent out a letter saying that it's not going to, this will not affect like the amount of money that's coming out of the government and being paid to SVB and all the uninsured money that was there, like we're talking like upwards of tens of millions of dollars, even hundreds, potentially hundreds of millions of dollars. Where's that money come from? Where is it coming from? The government doesn't have money. They can print money, which increases inflation, which decreases the value of the dollar. And it's it's ugly to see. It's ugly to witness. Because I could not imagine a government saying, "Oh, your money is fine. We're stepping in and we're giving money," and no one's asking the question, "Where's that money coming from?" It's like the government not saying that they don't have insider trading information for the stocks that they purchase or the bills that they pass in order to help, whether it's like tech advancement, pharmaceutical advancement, whatever it may be. Like there's insider trading going on. Like there is a lot of weird, and I mean they're not weird. It's a choice of word that I'm using just because the way the government handles specific situations blows my mind. So they like, I would assume like if we see bonds like towards war efforts, like we're gonna see more money push from the government towards those efforts, and we're gonna see those types of bonds go up, and they're gonna make it like bandits. I mean, Nancy Pelosi did it consistently, but there's other government officials that go through this that they just don't. They're just not being exposed the same way Nancy Pelosi has been exposed over the last year. Um, but anyways, I'm curious to see what happens in this week, especially with the Fed rate hike, and how it's going to affect banks further on. The one thing about Fed rate hikes that I can say is true is that because it's a trend, and I'm hoping it changes this week, but whenever there's a Fed rate hike, there is a constant uptick in stocks, a very big uptick in, like, it's green for the entire day, and it's weird because you would think that if we see anything that impacts the banking system or whatever the Fed rate hike does to the banking system, you would think that this would affect things negatively, but it doesn't. And it's it's very odd. It's very odd. Um, but yeah, that's what I wanted to touch on today. I'll see you guys soon. Hope you guys have a great rest of the day.